Hello there, welcome to Market Call. Our guest is Kim Bolton. He's President and Portfolio Manager at Black Swan Dexteritas, and he'll take your questions on technology stocks. Call us toll free, 1-855-326-6266. Email us, marketcall@bnnbloomberg.ca. First, though, here are some of the big stories we are bringing you from the BNN Bloomberg newsroom. Canada's annual inflation rate slowed in December to 6.3%. The report indicates that lower gasoline prices led the pullback, while shelter was again among the major contributors to price gains, with increases in mortgage interest costs and rent. Food bought from stores rose 11%. Layoffs continue in Canada's tech sector. Montreal-based digital payments company Lightspeed is cutting about 300 jobs, and it'll take a restructuring charge of at least $12 million. Lightspeed says the changes are expected to unlock efficiencies after the company added employees and technology via acquisitions. And shares in Bombardier trading higher, up 6%, almost a 40% gain over the past year. That's after the company says its 2022 results are set to top previous forecasts. The Montreal-based maker of private aircraft now expects revenue of about $6.9 billion US and an adjusted profit of $930 million. Bombardier shares have more than doubled from lows of last October. And here are the markets. The Toronto Composite hanging in there. TD saying today's inflation report won't deter the Bank of Canada from continuing the fight against inflation. And let's have a look at the U.S. markets, which, of course, were closed yesterday. U.S. stocks searching for a direction. Okay, so Kim Bolton is our guest today. He's taking questions on technology stocks. You're just back from that big CES technology bash in Las Vegas. What jumped out for you?
It was amazing. It's the first time I've been to it. I've been to a lot of the Gartner symposiums and so on, but I've never done the Consumer Electronics Show. What was it, 120,000 people, 35,000 exhibitors. It was amazing.
We heard that there was an awful lot of electric mobility there, cars, other devices for getting around.
That's interesting, Andy, because you're right. There was a lot on the autonomous driving side, not so much on the electric. It's almost felt like the shine had sort of come off that. But it was, I was only there for a day and a half, 43,000 steps later. Yeah.
Oh, you had your pedometer going? Yeah. Good for you.
Yeah. So it was, a lot on the autonomous driving side, a lot on the robotics. Over in the area pavilion, it was more skewed toward the entertainment side of things. In the Venetian, it was more so sort of on the robotics side, and then in the big convention center that is spread over an amazing area. It just had all the big companies there and everything that was coming out. I don't know, things like the PlayStation, the virtual reality PlayStation 5 was announced there. And it's actually going to go on sale in February. That's the one where you actually have the goggles on and you have the two handsets. And so you actually have arms in these virtual reality. It was phenomenal.
You may have seen that story in Nature, I think it was about 2 weeks ago, researchers arguing that progress in technology has slowed in many areas. Do you think that's because we're spending too much time on internet and virtual world stuff and we're neglecting other areas of technology?
I don't know. Go to the CES conference and that will just kibosh that whole argument because there's just so much coming out. There was a really interesting German company, a motorcycle company, that actually has the engine in the rear wheel, like around the wheel.
Whoa.
Instead of actually, sitting on the engine like a lot of the other motorcycles, this actually had it in the wheel.
An electric motorbike, I'm guessing. Yeah. In the wheel itself.
And then where the motor actually normally goes, like where you're sitting on it, that's where you put the battery in, so you can actually get more battery life bigger area, and then you have the engine in going around the rear wheel.
Yeah, I've heard it said that motorbikes are, in many ways, throughout the developing world, it's the way of getting around. So if they can be electrified, that'll be huge progress on pollution.
Yeah, it was. But just going to that conference, there is so much happening out there. A lot of it is, just trial and error and seeing whether they can actually get some traction through the consumer. But that's the whole idea of that show.
Okay, we're looking forward to getting your views on technology stocks. So Kim Bolton is our guest on Market Call today. He's president and portfolio manager at Black Swan Dexteritas. Tech stocks are on the menu, 1-855-326-6266. Okay, we are talking tech stocks. Thomas sent us an email. Wants to know about Baylin Technology. What does Kim think of Baylin? I know it comes up all the time, but remind us what Baylin does, please, Kim.
Canadian company. They design and manufacture basically antennas and tags, which are very, very important. And, they're embedded in smartphones and handsets and tablets and so on. The problem with Baylin is it's just tough to make money. And they did a lot of acquisitions. They had a loss in the most recent quarter due to operating loss of interest and income tax expenses and so on. Currently, trading around 36 cents. The street out there, we don't own it, but the street out there has a 12-month price target of 67 cents.
Okay, so it's not interesting you that much right now, or?
It's come down an awful long way, but it's sort of steadied out. It's just, it's a 30 million market cap company. It hasn't got a lot of liquidity, so. And, the average volume is, it's less than 60,000 shares a day, so it's tough.
Okay. We have Brian sending us an email, wants to know about Absolute Software. What about the future potential for this one?
Mm-hmm. So currently trading around $15.31. It's a sizable company. It's just around 800 million in market cap. We don't own it. We follow it very, very closely. It's we're waiting for a pullback. And they actually have a dividend yield of 2.4%, which is a bit attractive. It provides cloud-based platforms for both, companies, enterprise, and public sector institutions.
Is it security? It used to be security. Go on.
So it's cloud-based. It has a secure endpoint portfolio embedded in it. With the dramatic rise of remote working, it did extremely well during that, but it's sort of come back down to earth. Revenue is moving up and operating expenses are improving. So the net loss is actually sort of moving down a bit. And it's done well in the last month. It's up about 17%. So, we'd be a buyer sort of down under 13 toward $12. Yeah.
What about acquisition? It seems logical a company like that might get taken out by another big security player.
It could. However, it's a crowded space now, right? If you go back a couple of years, even a couple of years ago, there were a relative finite number of players in it. But now, it's huge. Absolute is more of a regional player for Canada. And so, and it's sizable. It's just shy of $1 billion in market cap, so it's reasonable.
I remember hearing that a lot of these security breaches, they're not wizard hacking or anything. It's just they get hold of a guy's password.
Yeah, and it's all about detecting, and then coming in with a response. And then now you have the likes of like a CrowdStrike or a SentinelOne that have really upped the game when it comes to the response side.
What's a response?
So in the past, what happens is that you'd have one of these security companies, and they come in, and they would be able to detect when the bad guys are into your system. Mm-hmm. But then, they just report it to whoever the customer is and say, you got a bad guy, we can stop it. What do you think? But a lot of these ones have now sort of built up a reputation and trust. Now the customers can actually sign off and say, I want you, as soon as you see it, to get rid of them. Okay. And shut the door and don't let them back in.
Can they go after them? The hackers, can they go after their families?
I haven't heard of that, but I would imagine, right?
Maybe I read too much science fiction. I like to think you could send a big malevolent virus right down the line back at them.
Yeah.
Anyway, okay. Okay, I just reread The Neuromancer and classic William Gibson.
Yeah.
Okay, Lane has sent us an email, wants to know about STM Microelectronics. Can I get Kim's view? And remind us what they're all about, please.
Thanks, Lane. ST Microelectronics. They're a Swiss company, but they're in the semiconductor chip manufacturing. But what they've really carved out is that whole silicon carbide. I don't know if you've heard about silicon carbide, Andy. And so in the past, chips were made out of silicon, out of sand, right? And then you put them on wafers, and then you etch them and so on, and then you come out with chips. With the silicon carbide, carbide is one of the world's strongest natural materials out there. And they've actually developed the process over the years, and it's been around for a while. But, after years and years, they've started to bring the price point down. It's still, 2 to 3 times more expensive to buy a silicon carbide chip than a silicon chip, but the price is coming down. Now, the benefits of a silicon carbide chip is that it's faster, it's smaller, it uses less energy. And so, particularly for electric vehicles, autonomous vehicles, one of the biggest clients or customers of ST Microelectronics is Tesla. And another company that is very much into this is that BYD, the big conglomerate over in China that is the king of battery manufacturing around the world. And they've really sort of got into this silicon carbide.
Okay, carbide, incredible. It's a mixture of carbon and a metal.
Carbon and sand. Yeah.
Right, and there's a metal, though, in carbide itself.
Yeah.
I think there's a metal in there, too.
Exactly.
Yeah. That's fascinating. We're going to be back. Kim Bolton is taking your questions on tech stocks. 1-855-326-6266. We have an email from Stuart. Stuart is curious about Nuvei, the Montreal-based payments technology company. What do you think?
Well, let's see, currently trading around $43. And I actually own it in some of the separately managed accounts. I don't own it in the fund. The price target we have on a 12-month price target is $64.70, so it's got a decent runway. Interesting company, and the reason we follow it, and more so lately, is because they just recently acquired an American integrated payments and commerce platform called Paya. It's a pretty big acquisition for them. They're a $5 billion company. They go out and they spend $1.3 billion on this. The deal is expected to help Nuvei diversify its business and accelerate its financial growth and further into the long term. But Nuvei, as you can imagine, provides a suite of payment solutions to support life cycle and transaction across mobile, online, in-store channels. It's international. It is very much a success story out there. Currently, around 43. We'd actually hold off a little bit. I think you can get it probably shy of $40. So buy it just under 40, down at 35, and then again down around 30. I don't think you'd see that last part, but that's our plan.
Yeah, their debt rating is below investment grade, not disastrously. Well, double B minus, according to S&P, but they left the rating unchanged after that acquisition. Okay, we have Ark in Milton, Ontario. Go ahead, Ark, please.
Hello, Andrew.
Hey.
Thank you.
Pleasure.
Yes, I was wondering about NVIDIA, NVDA.
You got it, the chip company.
So currently trading about $169, $170. This has got a great runway ahead of it, and it's a massive company, sitting just, and we have a 12-month price target of $193.
Wow. Sorry, how much it was? Okay, so 193.
Yeah,
sorry, so not massively higher. Yeah.
You know, it's certainly come down from grace, but it's had a nice comeback lately. It remains, you know, one of the greatest secular stories in the semiconductor business, riding, you know, the major tailwinds, including transactions to the GPU and the data center and gaming and edge computing, autonomous vehicles and AI. It's really very much a leader in those advanced chips out there. So yeah, we own it in the fund. NVIDIA holds an 80% market share in what's called the discrete GPU market. So we like those companies that actually sort of monopolize a certain segment of the chip side. But you know, it obviously got overpriced when you go back into the mid of 2021. But here it's very fairly valued, and we like it.
We have Jordan in Calgary calling. Go ahead, Jordan.
Good morning, gentlemen.
Hi.
Thanks for taking my call. My question is about Upstart Holdings. They've had quite a bit of a decline in the past year or so. There's also reports that they are carrying consumer loans on their balance sheet. Just wanted to get your thoughts on the growth prospects for Upstart. Thank you very much.
Interesting company. Apparently, they work with banks and credit unions, and they use non-traditional techniques to predict creditworthiness of borrowers.
And it was actually a favorite if you go back a year ago for a lot of the banks. And they'd buy this software and it would help them. It would be more efficient, more effective in actually judging the loan quality out there. You know, it operates on a cloud-based artificial intelligent lending program. It's primarily into the U.S. Its platform aggregates consumer demand for loans and connects it to its network of the company's AI-enabled bank players. Currently trading at $17. We used to own this, but we got out of the way really going back into November, December of 2021. And we haven't weighed back in. The average analyst out there has a 12-month price target of $12.15. You know, all of these price targets and PE ratio, everything has come down significantly. So as soon as you start to bump up against those, you know, a $19 price target, which I think you will, you'll see these analysts just sort of upgrade it from there.
Okay, sorry, what was that thought? If it gets to $19, you'll see analysts upgrading it.
Yeah. Everyone has become very, very conservative, brought down the price targets, brought down to the PE multiples and so on. And we'll see, you know, going into the earnings and over the next couple of weeks, it's going to be pretty darn important in whether, you know, whether you maintain in this bear market or whether you actually get a cyclical, you know, bull market within the bear market.
We're going to take a break and we'll have a look at Kim's past picks. You're watching Market Call. Kim was on our show February 2nd of 2022, so the past year or so has been a tough time to own tech stocks. His first idea was Texas Instruments. Now, this one down, but not that much.
Well, compared to the rest of the rest of the technology arena, this is winner. We own this in the fund. We own it in a number of separately managed accounts. It's a semiconductor stock, but it's sort of, it's involved in sort of the boring side, but that's why it does so well. And it really sort of has two business lines. One is toward the analog segment, and the second is toward what's called the embedded processing. So the analog side of it, it offers power products to manage power requirements. So it could be for power switches, voltage references, lighting products, and stuff like that. The embedded processing side is interesting because basically all over your house, all over the studio, are these embedded processing or microcontrollers. So the microcontrollers are important for mathematical computations. So it's used in automobiles, in personal electronics, refrigerators, communication equipment, calculators, and everything. So it's just an absolute money machine. And they recognize that, so they're actually building a new plant, a new semiconductor wafer manufacturing facility in Sherman, Texas, to do that 300 millimeter semiconductor wafer. And it's scheduled to actually open up in 2025. So they will be the king of these analog and embedded processing microcontrollers for quite a long time. Currently trading, I think, around 178. It's pretty evenly priced. You know, the average analyst out there would have it up towards $195, $200, but it's fairly well priced. And it's a massive company, right? It's a $162 billion company. Really like Texas.
Shopify, this one down. No great revelation there. Would you be a buyer these days if you came to it fresh, Ken?
Yeah, we actually own it. You know, we lightened up a little bit back around March, April of last year, but we've continued to hold up just sort of less than 1%. We like the company, we like the management. There's a lot of moving parts going on within Shopify, especially in their ongoing negotiations with Amazon's buy with Prime. So they're sort of talking about whether they would actually partner on that side. You know, there are some concerns out there, you know, what's going to happen with them as they go into possibly a recession, those ongoing negotiations with Amazon's buy with Prime. But they have a new CFO, Jeff Hoffmeister, and he has put it down as a mandate that he wants to get a path to profitability. So it'll be an interesting time, and we still like this. Currently trading 30, just shy of $37. Average analyst out there has a 12-month price target of $41. You can see that people are a little worried about how these tech stocks have recovered. And, you know, Shopify has recovered an awful lot in the last couple of months.
Right, from the low, from the October low. Yep. Okay, and Constellation Software, this one holding its own over the period.
Yeah. You know, this is one of the darlings of the Canadian technology arena. And again, they also have quite a few moving parts going on in here. One of their business units, Andy, it's a massive business. It's so well run. But one of their operating segments is a segment called Valeris, and they're just spinning off. Remember Topicus? Remember when they spun off Topicus?
Yeah.
So they're spinning off a segment of the Valeris group called Lumine, Lumine, I don't know how to pronounce it.
Okay.
And they're using that to actually buy, the proceeds out of that to actually buy, for Lumen to actually buy this company, Wide Orbit. And it's very much involved into software businesses and financial services and education. Valeris Group is into the agri business. But it's, you know, the return on capital for Constellation, over the last 10 years, it's 32%. It's just a phenomenal job that they've done. They've acquired about 270 startups since they were founded. They have all these operating units everywhere around the world, and it's just an amazing management job that they've done there. So currently trading at 2,200-ish, and we have a 12-month price target of 2,475.
On Constellation.
On Constellation.
Where is it trading again? Sorry, right now.
2,000, I have it as 2,255.
Okay.
Yeah.
So you're not seeing massive upside, but you admire the company.
Oh,
anyway.
yeah.
Kim Bolton is taking your questions on tech stocks, 1-855-326-6266. Inflation in Canada slowed to 6.3% year over year in December. That was slower than the 6.4% rate that economists had expected. And on a monthly basis, the index fell 0.6%, the biggest monthly drop since April of 2020. Data from StatsCan indicates that slower price growth was offset by increases in mortgage interest costs, as well as clothing and personal care supplies. Barrick Gold has missed production forecasts for the fourth quarter and full year. Gold output was below analyst estimates in Q4 at 1.11 million ounces. And Barrick's full year production dropped to its lowest level since 2000. The company says operational issues in Nevada and the South Pacific held back output. Sales at Good Food Market dropped 39% year over year in the company's latest quarter as the food kit company pulled back on promotional pricing campaigns that were supposed to lure in new subscribers. Good Food says its newfound price and cost discipline helped boost profit margins to a record high. And there is the TSX edging higher today. We did get that relatively lower than expected inflation number, but TD saying there's little doubt that the Bank of Canada will increase rates again, or there's a strong case for them to do it on January 25th. And let's have a look at the US markets, see how they are faring today as Americans return from the Martin Luther King Day holiday. Okay, we'll have a look at the US markets later. Maybe we have Keith calling from Brampton, Ontario. Go ahead, Keith.
Thanks for taking my call.
Pleasure.
Kim, can I have your outlook for PayPal? I'll hang up and listen to your response. Thank you.
Thank you.
Thanks for the call, Keith. PayPal, we like this. We own it. Sort of in the same breath as like a Shopify. We sort of trimmed it going through the first quarter of 2022, and then more recently we've added back to it. So it's currently trading at $79.50. We have a 12-month price target at $105. So it has, and it's actually attracted quite a bit of attention out of some of the investment banks down in the States, and they have it as a conviction buy with a lot of the Goldmans and Morgan Stanleys and Bank of America and JP Morgan. So PayPal is well positioned to benefit from all the aspects of growth around digital payments, commerce, and services. It's a lot more popular actually over in Europe, but I think you'll see that change because the U.S. is actually revamping their whole sort of payment processing side. In mid-2023, which will actually sort of roll over into Canada. I think that's going to actually help the likes of the big payment processing companies like PayPal. Payments from digital wallets is definitely going to outpace that of sort of cards, the Visas, the MasterCards, American Express around the world. Their most recent earnings report The revenue jumped by 12%. They reiterated their 2023 expectations for at least 15% earnings per share growth and at least 100 basis points of EBIT margin expansion. So all the ingredients are there. Again, it goes back to the macro side. You know, if we can actually see an end to the, a taming of inflation, an end to the rising interest rates, these are the kind of companies that are going to do extremely, extremely well.
Let's head to Etobicoke, Ontario. Glenn, go ahead, please.
Hello, Kim. Thank you for taking my call. Today, I'd like to know about Asana, given that it's fell quite a bit and it doesn't currently make any money. What is your outlook for Asana for maybe the next 12 months if the macro environment improves?
Mm-hmm.
So that's a company, I think it's software to help teams work together.
Yeah. It's very much, Glenn, thank you very much for the call. They compete with the likes of Slack, Atlassian, Smartsheet, but they're a leader when it comes to the whole collaboration, work management space. Mm-hmm. And they just sort of bring together team leaders, manager, executives, and they have this solution that definitely enhances productivity, increases accountability. Now, we did own this back in 2021 into early 2022, but we got out of the way really around this time last year, as we did with a lot of the software stocks. The software stocks were, Glenn, as you mentioned, they're not profitable. Tremendous growth rates, right? 30, 35% growth. But they're going to be here for a good long time. Remember that Asana, its co-founders are Dustin Moskovich and Justin Rosenstein, who were Mark Zuckerberg's partners over Facebook. So they have deep pockets. They're in this for the long ride. And as they always talk about, the total addressable market in this space is about $30 billion. So currently trading at around $14.50. We have a 12-month price target of $20.50. We will weigh back in when the macro picture gets a little clearer.
And Asana, I had to remind myself, it's a yoga pose, often a meditation sitting position. Okay, we're going to be back with Kim Bolton. He's taking your questions on tech stocks, 1-855-326-6266. Okay, we have Usha calling from Calgary. Go ahead, Usha, please.
Hey, good morning, Andrew and Kim. I'm a first-time caller and
good.
a fan of this show.
Thank you.
Kim is one of my favorite advisors on Market Call. My question for him today is on Amdocs. The ticker symbol is DOX. I would like to know Kim's take on this stock. Would he be a buyer of this stock or would he wait for a pullback? I just look forward to getting his opinion. Thank you.
Thank you.
Thanks, Usha. We just started following this over the last 3 or 4 months. It's an interesting company. Interesting because it actually did not fall off a cliff like a lot of the technology software companies did. And it's interesting because, and I think the reason for it is because they've been able to maintain their growth. They haven't lost customers. So basically, Ushan and Andy develops and provides software and services primarily for the telecommunications and media industry. Mm-hmm. Their biggest client is AT&T. It accounts for about 27% of their revenue. The top 10 clients in the media space actually account for 70%. You may say that's a bit of a risk. Mm-hmm. However, think about it that these media companies, when they buy in and get this software, for them to actually change is a pretty big risk. Yeah. And so it becomes very, very sticky business. Revenue of about $4.5 billion, net income of about $500 million. They just ended up acquiring a company called Open Market. Well, they did that at the end of 2021. And it trades at a multiple of 20.6 times trailing earnings today, PE of 14 times. So currently trading around just shy of $90 because it's actually sort of hung in there with the market and hasn't really come off like a lot of these software companies. The price target is around $97.50. So it hasn't got a long runway, but it's a good, safe software play.
Okay. Mark in Gatineau, Quebec. Go ahead, please.
Yes, good afternoon, gentlemen. Thank you for taking my call.
Pleasure.
Hi there, Kim. I thought I'd drop a line on the BNN stock fishing hole. Could I have your thoughts on the Quisitive Technologies, symbol QUIS? It's a small cap fintech with their PIQ, and they're also in the call with Microsoft. Thank you kindly, and drive carefully at home there. I hear you have some raining rain down there. Okay, bye-bye.
Quisitive.
Yeah, thanks, Mark. Symbol is QUIS, right? And so
there we are. Yeah, 71 cents.
We've been following this. It's a small company, again, on the software side. We actually have a 12-month price target of $1.20, so it has a decent upside at 71 cents. It's just a bit too small for us to actually participate. But Mark, send me a note to our office, Kim at blackswandexteriordas.com, and we'll send you out a report, okay?
Okay. I think... Okay. We have a caller from Mississauga. I think it's Joseph. Go ahead, please.
Hi. My question is about Converge Technology Solutions. Yes, I just would like to know, is this like a good time to enter the stock? Because I know like recently the managers, they are looking into acquisition or mergers. So do you think it's a good time to enter the stock? Thank you.
Thanks.
We follow this, Converge Technologies. Symbol is CTS, currently trading at just shy of $5. And it's a fairly sizable company. It's got a market cap of $1 billion, and we have a 12-month price target of $8.35. So it provides software-enabled IT and cloud solutions, which is called IT service provider. It's a bit of a crowded space. They're offering solutions, bring in a bit of a blockchain solution, but then optimization and solutions analytics. The acquisitions has been a big part of their growth. They've made about 35 acquisitions over the last 5 years. So it's sort of like a mini Constellation type thing. And so we follow it. We know a lot of people like it around Canada, so that's why, but we just haven't weighed into it. So, you could buy it. I'd actually maybe wait for about $4.60, $4.20, and then about $3.75. But it has a decent runway. Thanks for your question.
We have top picks coming up, and two of them are Chinese-based companies. You're watching Market Call. Let's get to those ideas. The first one is BYD, the Chinese conglomerate. What are they all about? Remind us.
You don't hear that much about them, right? But this is an $850 billion market cap company. Wow. It's huge. They're involved in a variety of markets, all the way from automobiles to electronic to renewable energy, batteries, and so on. You may remember BYD. This is the company that Warren Buffett bought 10%. He actually, but then, I don't know, it was about 4 or 5 months ago, there was a lot of news wires that he was actually selling part of it, but he actually got up to about 14.5%, and he just brought it back. He just took some profit off the table, brought it back to 10%. So anyway, it's one of the largest new energy vehicles, NEV, and power battery makers globally. It owns 32% of the new energy vehicle market in China, 26% of the power battery market in China. But then it's connected up with a lot of the OEMs, the automobile manufacturers, the Volkswagens, Toyotas, Hyundai, Ford, around the world, supplying them not only new energy vehicles, but also the battery components on it. So this is going to be a company that you're going to hear a lot about. We own it, currently trading at a... Now, one of the problems on this is that it's an ADR. And I know some of the platforms here in Canada don't allow you to actually buy into the ADR. Some do, but you can actually get it in our fund. Currently trading around $59, has a 12-month price target of 76.
Okay, we better keep moving here.
Yeah.
Alibaba, you like the look of them currently?
Yeah, a bit of a theme here in China. And we were just talking about it during the break. A lot of investment houses here, overseas, are actually claiming that the Chinese market is going to outperform that of the North American, possibly the European. And that's all around the whole reopening. But it's not just the reopening, it's actually the government is a lot more friendlier to, and every day that passes, there's new news that comes out about how the government is becoming more friendly with the technology arena over there. So Alibaba, it has 4 segments: commerce, cloud computing, entertainment, and then sort of an innovation side. Currently trading at 117. It's bounced off that low of about $63 only about 2.5 months ago. And we have a 12-month price target of 146. But as soon as it gets to 146, things are going to start rolling, and they're going to raise those targets going forward.
And your final idea, Taiwan Semiconductor.
Yeah. Now, the only risk here, of course, is Taiwan. However, Taiwan Semi is the undisputed market leader when it comes to semiconductor foundries. So they don't design chips, they manufacture. They're very agnostic, so all the big companies, NVIDIA and AMD, and they all go to TSMC. Apple, they all go to TSMC to actually manufacture. They have the biggest foundries in the world, the most capacity, and the most cutting edge. So they're actually going to be coming out with their 2 nanometer, but they're in full production on their 3 nanometer, currently trading at $87. We have a 12-month price target of 104.
Okay.
Did I make it under the wire?
I think you could, yeah. Ken, thank you. Thanks very much indeed, and really enjoyed it. What electric bikes, we were talking in the break. Would you ever get one yourself, an electric bike?
I'm sort of like you. I like the exercise.
Yeah, it's about the only exercise I get.
Yeah, like if you want to get from A to B, it's quicker. That's the place to be. But again, on that CES, and you've got to go with me next year, okay, Andy?
That'd be fun.
The electric bike market is just massive if you look at what was going on in the CES. Just massive.
Well, they have a smaller environmental footprint than electric cars, so it might be the way to go. If we're worried about that. Kim, it was great talking to you.
Yeah, thanks a lot, Andy.
Kim Bolton of Black Swan Dexteritas. Let's have a look at how the markets are trading now. Our Bloomberg partners have an intriguing story that investors are the most underweight in U.S. equities since 2005. The most underweight, wow, in 17 years. Now, apparently, they've been moving towards regions seen as cheaper. And that's according to a Bank of America Global Fund Manager survey. Participants were a lot less bearish, but they moved into emerging markets, Europe, and cyclical stocks, and away from pharma, tech, and the US, according to Michael Hartnett of Bank of America. So that's fascinating. And Kim touched on this just now, that a lot of Wall Street houses reckon that China is looking more attractive than the US market. Let's just see quickly how the TSX is doing today. And you can see it's marginally up. So far this year, I know the year is young, the TSX is up 5.4%. The S&P is up 4%, and the NASDAQ, home to the big techs, is up 6%. But that has lagged the gains we've seen in Europe, partly because inflation showing signs of easing there, and also the much-feared natural gas crunch has not come, partly because of mild weather. Europe is up about 10% this year. Japan, I mentioned this yesterday, struggling. It's flat for the year so far as the Bank of Japan finally moves towards tightening policy. Thank you very much for watching Market Call. Christine Poole is up tomorrow.